Hi, this is Dan Collins, Editor-in-Chief of Futures Magazine for Traders Exclusive, coming to you live from the floor of the Chicago Board of Trade on Monday, April 28th. Wanted to talk to you a little bit about the ag markets because we're coming up on a time where the activity gets a little more exciting. We're coming into the growing season. We're supposed to have a whole week of rain here in the Midwest, which is interesting. It may put off planting. Planting's starting to be underway throughout the Midwest, and the amount of moisture in the ground is an issue. One thing I wanted to kind of talk about these markets is if you're used to trading financial with a regularly quarterly cycle, that's not how it works in ags. There are different contract months and they mean different things. You're actually talking about some significantly different contracts. You know, the May, July contracts in the corn, wheat, and soybeans are based on stored grain. Further out, November, December, is this growing season's contracts. Now, while both contracts are going to move the same direction on fundamental and information, the movements can be separate. A lot of people try and play the spreads in these markets, which can be a little bit safer than trading the outrights, but you need to remember they are different contracts. So the movements in whether you're talking about old crop or new crop can be pretty significant. So while you can reduce some risk with spreads, you still have a lot of risk. And what we've seen this year, which is kind of interesting, is we're in a situation where there's very low carryout for the previous years. There's not a lot of grains in storage, and there's a lot of planting expected, and there's expectations for a very good 2014 crop. So there's a large dichotomy because the markets are sensitive to large movements because there's not a lot in storage. There's risk on the downside because they expect a large crop. So what that means is you can have some really significant moves in the spreads. So while you can reduce risk, you don't want to put too many spreads on. You want to acknowledge that we've already seen instances where in a couple days they move in 10, 20, 30 cents in the spreads alone. So that's a significant move. So you can't, you're not that safer. It provides a lot of good opportunities this year when you kind of look at the new crop, old crop dynamics. But it's important to get with your broker and to kind of understand the differences in them, because like I said, while they will move up or down on the fundamentals, the movement depending on old crop and new crop can be significantly different. So be aware of that. It'll be an interesting growing season in 2014. This has been Dan Collins for Futures Magazine and Traders Exclusive. Have a great day.